Hello, friends. Happy Friday. Normally this is Thursday, but it is now Friday. Late yesterday, I was in meetings most of the day, and yet late yesterday I came up to the great mountains of New Mexico, and you know it's true. And you can look around and see that this house, it's a real mountain house. It's got a clock with moose all over it, and pine trees, and radiator that heats the whole place, and a TV from the 1980s. But long story short, guys, let's talk market. I do have a teaser for you. At the end of this, I'm gonna give you a little insight on gratitude and why I may not be working a full day as expected. I was supposed to be working right now. So I'll show you why I may not be here working today. But first and foremost, the markets. Rates are up. Freddie Mac, here you go. As of September 1 yesterday, 5.66. And guys, remember, green is good, red is bad. And we called it right about here mid-August that we were probably going to head down to these levels. Why did we say that? Well, if you look at the 10-year, this is the 10-year treasury. You guys can see that we called this 3.25 level. We said, right around here, we were thinking we were heading to that, especially when we didn't hold these levels. We thought we'd go to 3.25. It's important that we hold these levels because we could go as high as 3.5 if we don't hold, which will make our rates go higher, our interest rates. If we hold this level, come back down, maybe we get down to that 3.10 level. Maybe that'll help a touch. Time will tell. But it is amazing how these technical signals, man, they're really cool. Today's job reports came out, and interestingly enough, the jobs report looks strong on the surface, 315 jobs created, but the deeper dive is going to show you why our rates are somewhat improving this morning. First of all, they revised June and July's numbers, and it was actually down 107,000. So they were worse than expected from 2 months ago. That's fine in those, in those revisions. But get this. For the jobs created, they do a household survey. So this top little section is the BLS. It's the Bureau of Labor. And so the household survey, they actually make phone calls, which is crazy. They call hundreds of thousands of homes, and they found out that there are 442,000 jobs created. But get this, guys, almost 3 out of 4 of those were kids from 16 to 19 years old. So while the job numbers look strong, it's the 16 to 19-year-old kids, and no disrespect to those folks, most of them aren't making a whole lot of money at that age. So it's not like this is a really good jobs number, even though it is on the surface. And what you may note, or you may or may not, but unemployment actually went up. Despite these really good readings, and employment went from, I guess technically down, right? Or however you want to phrase it, but it went from 3.5 to 3.7. So that means unemployment rate went up, like more people are unemployed, but yeah, we just told you these are really good numbers. Why is that? Well, if you look here, the total labor force is estimated to be about 164 million people. Well, 786,000 this last month came into the force. So it increases that number. So when you take the percentage, if the total number of unemployed is 5.7 million, you divide that now by a bigger number, the 164 million, that's the reason why the unemployment went up, even with a good jobs report. So the reason why it's not good, it's bad for the economy, good for us, is that again, it shows that if a weaker job market is going to make, or labor market is going to make inflation subside, because employers won't have to pay through the nose to hire new people if jobs aren't or if employers aren't trying to overpay to get somebody. So this is good news. A couple other things real quick. So Loretta Mester, she's a Fed board member, and she had a very short speech earlier this week, and she said the word pain. So Jerome Powell mentioned pain when they did the Jackson Hole announcement, a week ago, but she mentioned it 9 times in this really short speech. Now, by the way, we just like to bring up that a year ago, this is the same lady that said by the end of the year, meaning 2021 last year, and this was August 27, she expected inflation to be 3.5% to 4% with a drop in 2022. Guys, inflation's north of 9, ended up the year north of 8 or 7 or 8. So she's not been the most accurate. So we'll see how much pain is coming. The housing market slowdown, we've talked about it, and people, it's an activity slowdown. I don't necessarily see this big, quote unquote recession or drop in prices. This is Goldman Sachs just kind of echoing the same, where the house prices will eventually flatten, not decline. So with that said, what has declined, like we've been saying, is activity. This was kind of just punch in the face, like, oh man, year over year comparisons here. The mortgage bankers, they basically said that the year over year transactions are down 23% for purchase applications. That's huge. And refis, we all know, well, we know the mortgage business, refis are down 83% year over year. That's no real surprise, the rates being where they are. But really and truly, it says refinances made up roughly 30% of all transactions. I don't see that. Most of our pipeline, I'd say almost exclusively is purchase. But there's still those refi shops, I'm sure, that are out there that are doing refis when they probably shouldn't be. That's just my personal opinion. Moving forward, let's see what else we got here, guys. The number of people saying they plan on buying a home in the next 6 months is the lowest level since 2015. So basically, not only is the activity down, you got the number of people saying that what are they going to do in the next 6 months is also, going down as well. So I think we're in for another, call it 6 months of waiting for the spring season to bail us out, if that's true for next year. I saw this article and I thought I'd share it. Crypto.com, and imagine if you were this person. Crypto.com mistakenly put $10.5 million into a woman's bank account of crypto. They only meant to put $100 in there. So instead of missing a keystroke, they missed a couple and added a few more zeros. So what's funny is they're actually, trying to sue this lady, saying, "Hey, give us back our money." And she's like, "I didn't notice there was an error." She went out and bought a mansion immediately. And I think it was in Florida. So that's pretty funny. And then the other part is Matt Damon's just, everybody's kind of mad at him because he was the endorsement or the face for this thing. And since cryptocurrency and Bitcoin's down like 70% since this commercial aired, that's the other part where they're just kind of hot water. So I thought that was funny. Lastly, guys, perspective. So as I mentioned, I got in New Mexico last night about 11 o'clock last night, and plan on working all day today. But yesterday, as I'm out in the middle of nowhere, this was my view, and my car, for some reason, just started going nuts. And so I was revving literally as much as you want to rev, and it wouldn't go any faster than 30 miles an hour. So at first I'm panicking, I'm sweating because this is my view for 360 degrees. I'm in the middle of nowhere, cell phone coverage doesn't work, and there's barely any cars on the road because you're out in the middle of nowhere. So the perspective is, oh my gosh, this is so terrible. Well, look, ultimately the car did go 30 miles an hour, added a few hours, 2 hours of the drive time. That's fine. But man, what a great night. I mean, it was really cool. The weather was perfect. The sunset was amazing. I'm in the canyons of, West Texas and eastern New Mexico. And it just ended up being a really cool night. Now I'm about to leave right now to see if this small mountain town can even fix my car. If not, I may be spending the rest of the day out. And again, these type of conditions, going to El Paso to see if they can fix my car. But if you need me, I might be available via cell phone today. But I think the reason why I'm bringing this up, guys, is just perspective. It could be like, oh man, woe is me and the world sucks. Instead, it was a great night, wonderful sunset, great music, just listen to it. So it was a time just to settle down, couldn't talk to anybody, and just some time for reflection. So, make lemonade out of lemons, basically. And guys, lastly, our workshops, we skipped August on purpose because August is usually a busy month. So August and December, we don't do these workshops. We're back in September. We'd love to have you join. It's the lead gen like a machine, right? Our leads are down. So we've, really focused on making sure lead gen's an important part of what we've done for the last 60 days. We'd like to share some of those tips and tricks, maybe get some ideas from you guys in the audience. Please join us. You don't have to be a realtor. You don't have to be a builder. You don't have to be, anybody that wants to learn lead gen. This is, how to sell widgets and forming the habits to do it, and some tips and tactics. So join us. There's a QR code. As always, guys, we thank you so much for watching. Sorry for being a day late on this, but I did want to wait for one, the job reports to come out. And then two, just like I said, just in meetings all yesterday. So I am available, I think, today and this weekend. But if you guys need something, let us know. And otherwise, wish me luck on the car and have a great day, guys. Bye-bye.